rental demand. This is actually a very important topic to us real estate investors because we can be as caught up as we want in interest rates and economics and all that various stuff. But at the end of the day, the rental demand is really what determines a lot of things in our portfolio. It's directly tied to our income. It's directly tied to our net operating income, therefore directly tied to our property values. What's happening with rental demand right now, given all the economic risks that are happening?
Okay, so let's put a few pieces of the puzzle together. First off, rental demand continues to increase. But here's some fundamentals of what makes that all happening. We've all heard the stories about how many immigrants have come into the country, and it's up around 750 or 850,000. I mean, it's a ridiculous amount of people that have come into the country and are continuing to come into the country. Now, we need that immigration, but of course, they come in and they need a place to live. So what do? They want to rent. So the rental demand continues to be quite strong, quite high, and I don't see that tapering off anytime soon. What's happening in amongst all of that is, of course, the rental rates are increasing. Now, we look at national numbers, and neither of us like national numbers because, of course, real estate is regional. I'll talk about that in just a minute. But when we talk about rental demand, there's another issue that is kind of not being talked about. There's two. One of which is more and more investors are pulling out. Over the past couple of years, everybody was a real estate genius. We've shared that story many, many times. Everybody's getting rich. Now what's happening? We're into the slump cycle, the slump part of the real estate cycle, and all these investors are backing off, JG. They're going, I'm out. This game's too serious for me. It's costing me money. I'm at risk. All the rest of the stories that go with it. So guess what? Not as much rental inventory is coming onto the market. So from a real estate investor point of view, if you're a little bit sophisticated, have some techniques, some strategies, and really pay attention to what you're doing, you can be that rental housing provider. Now, the one piece that people aren't seeing is the relatedness of rents to interest rates. And when you look at what's happening and have watched what's happened as interest rates have increased, so have rents. It's a kind of an interesting correlation. Rents are lagging, but at the speed of which we've raised rates, it's actually quite a phenomenal, we'll have that slide in here, it's quite a phenomenal correlation between the two, and it's easy to see exactly what's happening along that line. So what does that all mean? If interest rates go up, you're going to see another increase in rents, by the way. It's interesting that Tiff Macklem, our governor of the Bank of Canada, is talking about trying to control inflation. Yet as he continues to raise rates, what's happening? The cost of housing is going up on both the buy side and the rental side in terms of the cost of carrying a mortgage and the cost of rent. So it's an interesting phenomena that the Bank of Canada is facing. But as real estate investors, we get to look at this and say, okay, here is the opportunity, and here I was starting to show up.
I think you said a couple things there. The first one is that you're right. A lot of speculators, I won't even call them investors, Patrick. I think investors, the sophisticated investors, see the opportunity. The speculators are definitely getting washed out of the market. We talked about that probably 8 months ago, and we said, listen, there's going to be a huge washout of these speculators, which is going to create opportunity and rental demand, and that additional rental demand and increasing rent rates is part of that opportunity. So that's fantastic. What I will also add to that, Patrick, that I'm seeing in the trenches right now is, and we'll actually talk about this in a segment or two from now, because consumer confidence is low and business confidence is low right now, a lot of people are kind of holding their breath as it relates to rents. And what I mean by that is they're not moving. I'm not seeing nearly as much activity in the back half of 2022 as I saw in the front half of 2022. And that's because people are a little skittish right now. Their payments have gone up on their credit cards. Their payments have gone up on their line of credits. Everyone is kind of just holding and saying, listen, unless I have to move, I'm not going to move right now. And that has an effect. Now, what's happening is that because of the lack of supply in the rental markets, this just continues to increase rent rates, which is what we're seeing because of interest rates and because of this lack of supply. Rent rates are still going up, but you are definitely seeing, Patrick, I know in the areas where I invest in Ontario, we are definitely seeing less activity than we saw in the front half of 2022. I'm very curious to see what's going to happen in the spring of 2023. I think that will tell us a lot. I think we're going to see more of what we have been seeing. That's why I've dubbed this year Sleepy 23. I think a lot of people are just going to hang on to their hat and just ride out the next 6 to 12 months before they start making any major moves?
Well, I think that's a great point, but there's a couple things that we need to shine a light on here. First is, real estate is regional, as are rents. I'm going to give you some idea here. Atlantic Canada, the leader by a long shot of rental increases. This stat here, 31.8. This is, by the way, from Urbanation.
These are percentage increases, right, Patrick?
Yes, sorry. These are percentage
listen, Atlantic Canada, you used to be able to rent a place there for $96 a month. So of course their percentage increase is high. Let's be real here.
Point made, but another segment that we're going to have to do, well, I won't go down that path. So then in British Columbia, you're up 16%. Ontario, you're up 15.3%. Alberta, surprisingly, is only up 15%. Saskatchewan, 12.9%. Manitoba, 9.8%. And Quebec is up 6.3%. Now, these are all kind of, you see that these are significant increases, that have taken place, often driven by the cost of carrying as, rental housing providers. Costs are going up. There is inflation. There's the cost of mortgages going up, et cetera. So these are just literally being passed down. I think that one of the issues that you're seeing in Ontario, for example, any economy needs to take a breath. So I think you're experiencing, like, we've been on this roller coaster of like, we're going way up, but then it's like the economy just needs to catch its breath. Ontario is that way. We're not seeing that same slowdown. And you're seeing it in British Columbia, the two high-priced market, Vancouver, Toronto, as an example. And then in Alberta or Saskatchewan or even Manitoba, they're just starting to ramp up. And why is that? Because interprovincial migration is driving people into those provinces because they got jobs, they can have affordability, and ultimately rents are starting to increase in those particular provinces. So that goes back to the regionality of real estate and what's happening on the rent side of the equation.
But I do want to say, Patrick, and I said this when prices started taking off as COVID was kind of like in doing its thing, prices started taking off. I was saying, you and I were both saying, listen, this is not good for real estate investors. And everybody was excited because everybody was a real estate genius. But I would much rather a market in equilibrium than a market that's out of balance the way it got, in terms of pricing. I'm watching this for rental demand because I don't want rental demand to outpace what real market rents are. I want just good, stable rental demand with good, stable rents that I could then cash flow my properties. If it goes up too much, I'm going to pay, and as investors, everyone watching this, you're going to pay the price later because rents will come back down. Everything always comes back in equilibrium. That's how the economics works. So it's important for people not to buy into this too much and to feed it too much. I want stability in real estate, not over the chart, over the moon raises.
Well, it goes back to what I just said. The correlation between interest rates is very interesting, and it works on its way up and it'll work on its way down. And ultimately, as rates come down, which they will, whether you think it's 23 or 2024, you can pretty much anticipate the rates coming back down. Will they go back to 2%? Not likely. But could they come down 0.5%? For sure. And it will, in fact, make a difference in the market. We saw that in British Columbia, particularly in the Vancouver market, back in, I think, around 2016, 2017. It's always lagging, by the way, which is good news for investors who are paying attention, because if you see that lag, you know what's coming and it gives you some time to relax or react. I don't think that you're going to see interest rates come down as quick as they went up, and not in this case. It was a pretty special time, so it was really easy to track those rental increases with those interest rates.
Did you say you expect rental interest rates to come down in 2033? Is that what I heard, or did you say 2023?
My intention was to say 2023 or 24, not 33. Could be. Maybe it is 33. Who knows?
Who knows? The bond yield is doing some interesting things again, which is, by the way, in case investors don't know, the fixed interest rates of mortgage companies is based on the 5-year bond yield, not necessarily the variable rate. Variable rate mortgages are based on the Bank of Canada, but not fixed rate mortgages. So just always interesting to say that, Patrick, because people seem to forget that.
Yeah. And I think there's a segment, I wasn't going to say it, but I'm going to say it. I think it's important, when we talk about Atlantic Canada, the East Coast, many people are going there because of affordability. And I mean, many people as investors are going there because of affordability versus the increasing rents, all very good. Just today, as a matter of fact, they announced that they're doing UBI, Universal Basic Income, and that will have an impact on what's going on in that world. And we're going to save that for another episode. But I wanted to put it on.
Who announced this? Planet Canada?
They approved it.
What? I did not see this. This is brand new information to me.
Breaking news.
Breaking news right here. Right here. I'll write it in. Breaking news. All right. I like it. I hope you've enjoyed this episode. Please like and subscribe. And if you've enjoyed this, please share it with someone that you know, because it's going to be incredibly valuable to them. Also, we'd love to hear from you. So please comment below.
If you're interested in learning about investing in real estate the right way, look at our Real Estate Investing in Canada program. 15 steps to successfully investing in real estate. Thousands of real estate investors have learned the right way to invest in real estate following those 15 steps. You're absolutely going to love that program. Take a look, click on the link in the description below.